Welcome back. Welcome back. Another week of weekly crypto market recap. This is number 15. We're pushing along, and this just another week in the crypto world. It's pretty exciting, regardless. It's not always good things. There's always gonna be bad things, but
Yeah.
the bad things. They give people a lot of clarity. On what exactly is the ideal chain to use, or even like why you shouldn't use one thing over the other because of like security risk or anything of the sort, pretty much. So it's definitely very interesting. I mean, I honestly, I'm not gonna say I like the fact that this happened, but I enjoy the fact that, like, this is gonna just show people, like, okay, we can do a lot better, rather than just like, to begin with, having like, something like 500 million, you know, on Binance Smart Chain to begin with. Is like, you wouldn't have thought about it. Like, if it came out right now, like if this chain was released right now, you wouldn't want people to be using it to begin with. But like, this is one of the first chains that came out after Ethereum, one of the first, like, EVM chains. So it's like, it was already there. People were already using it. There was already money in that chain. But like, hopefully now people can realize, there are way better chains. That, like, Optimism, like Arbitrum, like Polygon, and so on. So it's like, you know, that yeah. What do you think?
Um, okay, so I'll say this. I agree with your overall assessment of Binance Smart Chain, um, but I don't think in this case that was the problem. Like, I don't think in
Yeah.
this case Binance Smart Chain was the problem. It was just a bridge, and we've seen like
Yep.
countless, or not countless, but like a lot of bridges being hacked. Um, and funds being stolen from it. And I was explaining a bridge to someone else like a little while ago, and it's basically sort of IOU, right? So
Yep.
um, let's say you have token X on Ethereum and you want to bridge it to Binance. What happens is you put token X into a smart contract, and then the bridge itself will issue sort of IOU of token X. So um, let's call that I don't know, like uh, I dot token X. Um, for IOU, right? And that will
Yeah.
be issued on the chain that you're bridging to. So in this case, Binance Smart Chain. But the risk of that is that the IOU, of course, is completely worthless without the underlying, and the
Mm.
underlying is all held in this smart contract that's controlled by whoever owns the bridge. So that
Right.
is like pretty much by definition just super centralized. Um,
Right.
so
Right.
I think the problem is in this case more with bridges, and I think there's even an argument to be made that people during this bridge attack were actually somewhat lucky because Binance Smart Chain is so centralized.
Mm.
Um, People, or not just any people, like CZ and the whole Binance team could
Right.
freeze the funds because they could just literally say, okay, the Binance blockchain, Binance Smart Chain just stops working, right? So the
Yeah.
attacker literally can move the funds anywhere apart from I think he still got out something like 100 million, which is
Yeah.
obviously a lot, but um,
Agree.
also Binance and CZ are rich enough to just cover that 100 million. So I think in this instance, it's actually a sort of positive that the whole Binance Smart Chain was so centralized, because then they could freeze it and they can just give people their money back, and that would not. I
That's
don't
true.
think that would be possible with, let's say, Arbitrum or um, any of those other more those chains more focused on security and decentralization, right? Like, I think if, let's say, Arbitrum would be in a similar situation, and you would have the off-chain labs team somehow be able to convince all the validators
Mm.
um, to freeze the chain, I think that would do major damage to Arbitrum's reputation, because Arbitrum
Agreed.
has more of a reputation of like, no, it's decentralized and it's censorship resistant, right?
Mm,
Whereas so people in the case of Arbitrum, they would care. Whereas I think most of the people on Binance Smart Chain are just using it more as like an alternative casino. So they probably care more about getting
yeah.
their money back, because if you care about decentralization, you're probably not even on Binance Smart Chain in the first place, right?
Exactly. Exactly. Would you argue that it was also like an issue with like maybe how, I mean, I'm not going to argue that, Binance's bridge was any different from any of the other bridges, because there were many hacks when in
Yeah.
regards to mainly bridges and all. But would you argue that specifically, the Binance bridge allowed for an attack like this to even happen, like with this much money at stake?
Ooh, that's a good question. I don't know, because I don't know exactly the architecture of the Binance bridge, and I also don't know the
Yes.
architecture of the other bridges. So yeah, realistically, I can't really compare, right? But I'm sure people who know more about smart contracts
Yeah.
um, and security could make a comparison. Yeah, maybe, I don't know. Maybe the Binance Smart Chain bridge was less secure, although just going from a gut feeling, I don't know, was the bridge like officially owned by Binance or something? Or
Yeah.
because
It was.
in that case, I would expect actually it was probably more secure than some of the other bridges, because I do think although like everything is super centralized with Binance, I also think CC is pretty aware that because it's so centralized, um, everything needs to work well, right? Because otherwise,
Right. Right.
yeah, why would you go on like a super centralized thing that's not even secure? Then you might as well just use your bank account at that point.
No, agreed.
Um,
And he most likely uses that specific bridge for like, anybody that's trying to off ramp specifically on, Binance. So like it makes the most sense for him to try to make it as secure as can be,
yeah,
even if it is centralized the way that it is, with them being able to just stop everything. So yeah, maybe like that. I mean, this is just another argument for like, CCIP and why we need this. Like it's pretty funny. Like even CZ I think made a post was talking about like, yeah, this is why we need better bridges essentially, because
yeah.
it's just a overall security risk for not just like Binance Smart Chain but for every blockchain overall. So it's like, yeah, like I can't wait, because like there's so much to come that's gonna really improve things overall, and something like this would just be a thing in the past.
Yeah, I hope so. I mean, again, like on a technical level, I don't know the exact specifics of it. So,
Yeah.
and yeah, I can't really say if the CCIP architecture will be completely different from what we've seen so far from this super sort of centralized bridge design.
Mm, mm.
I would
Yeah.
say seeing the Chainlink team and what they do is generally like, okay, we hold off on releasing something until it is absolutely working
Exactly.
great. And they don't. I also like. I can't really see them coming out with CCIP if it's just a similar bridge designed to all the other bridges, right? Because then it's like, why
Exactly.
did you wait this long? Just copy
Yeah.
any of the other designs. And also, why are you even releasing this service that's already done like 10,
Yeah.
20 times? That's not really how I see them launching products. So it
Agreed.
probably is different, but yeah, I guess I would I would guess that I'm also not saying like, yeah, it'll totally be safe if I don't even know the architecture of it.
Yeah. No, agreed. Like I just go based off like the idea of how they designed, their decentralized Oracle. Like,
Yeah,
yeah, you could see like, Band Protocol, some even PIF network, like that was an Oracle on Solana, like many different Oracles out there, but like they've failed multiple times and costed like users like a bunch of money. So it's like you could see why like, something like an oracle would be important to get right. So that like just seeing how Chainlink handled you know their oracle and how they're structured, like how it's structured and everything, and without even really seeing too many, like you don't see too many like flaws, you can call it, on their oracle, you can say, because like it's obvious that they took so much time to perfect it in so many ways, where it's not just like limited to just you know let's say one chain. Like they're agnostic, they're blockchain agnostic,
Yeah.
so they can go on any chain. And like that also comes with risk too. So it's like it's so many things combined, where like just looking at their approach with just just the Oracle itself, you could see like, oh yeah, then some of their other products in the future, like CCIP, they will take the same approach of like making sure that it's like secure in many different levels. Because like something like this, something like a 500 million, it's not like Chainlink could just stop all chains, you know.
No, yeah.
So it's like, yeah, like I can't wait to really see where we're at, and like even a couple months from now.
Yeah, I guess that's even though that's maybe counterproductive to MUBX, but that's, I guess, one argument for not over relying on one service, right? Like
Yeah.
the let's say the Ethereum USD price feed of Chainlink was ever corrupted somehow, right?
Mm.
Then the entirety of DeFi would have a massive, massive problem.
Yeah,
Um,
agreed. And that's just
so
that price feed.
yeah, yeah, exactly. Yeah, that's just one price feed. But um, I mean, I do, of course, believe in their tech, and from what I've seen so far, there's, like you said, not really been any major bugs that I can recall.
Mm.
So let's hope it's the same for CCRP. But it would be kind of the risk that I could see is, let's say, it's as good as their Oracle service,
Mm.
to the point where like the majority of chains is connected via CCIP,
Yeah.
then you never want to have something happen, where where like a similar a critical bug is found in
Yeah.
CCIP, because then at that point billions could be drained instead of
Oh
just
yeah.
like half a billion, right?
Exactly. And then there's no way to recover from that. And
Yeah.
it's not even talking about just money, it's, reputation wise. Like nobody would really want to just trust Chainlink and even just CCIP in general. So it's like, yeah, it's there's a lot at stake, but like, like you said, like we've seen how they've handled things, before. So like, let's just see. Because I wouldn't be surprised if it really becomes even this the standard for bridges in general. So it's like I'm really excited to see what happens. But yeah, going into Celsius, man, it's pretty funny that they they just released information on all their users, how much they pretty much had in the platform, how much they
Yeah,
borrowed, and all
bro.
these different things. It's pretty insane, to be honest. I mean, I kind of see like why, like let's just say like like if they were like trying to like you know just trying to like work with the U.S. government, for example, to like just show like all the records of everybody that was using their platform or whatever, maybe for like them trying to like sell Celsius, or maybe just go bankrupt, or maybe just like because I seen the CEO, or I don't know what exactly he was, but he just left essentially. He took
Yep.
like millions with him, so it's like it's pretty interesting to see where Celsius is
Yeah,
at right now.
I mean, it's so down bad. I mean, it's just so. It's not even down bad, actually. It's just it goes
It's sad.
beyond. Yeah, it goes beyond like financial loss, right?
Right.
It's not just financial loss of like, hey, this guy lost 10 million or whatever, right? Even for the
Yeah.
smaller accounts, like even let's
Yeah.
say this person lost maybe a few $1,000s. It's just
Yeah.
such a bad look from a privacy standpoint.
Agreed. No, agreed. It's sad because like there's even a website now that you can go to and just type out
Yeah, exactly.
someone's name.
I mean, that's crazy, right?
Yeah, and like that's look, you could see like the leader. This is a leaderboard for the people that lost
Yeah.
the most money on the
Fuck, that
platform.
is so
Yeah,
much money. Holy shit.
yeah,
Yeah.
dude, it's insane, insane. So it's like, yeah, it just goes back to what we were saying in the beginning, where like it's a lot of bad going on right now, but it's just it's cleansing the bullshit. It's washing out the bullshit. Like this is something that people should have realized. Like I mean, you're trusting a centralized party. You're in crypto to begin with for decentralization. Well, at
Yeah.
least like most, or like some is. Some is just
Yeah.
really in it for the money. So that's why I see why they just threw money at Celsius. But like, this is why you shouldn't. You know, risk like this.
Yeah, I think you touch on a really good point there, where it's like, I think originally, or it's not that I just think it, right? That is originally what people were in for, it, the decentralization, and like having
Yeah.
censorship resistant forms of value transfer. But I think a lot of people who came into crypto later, and I think even us to a degree, right? If we're being honest,
Right.
um, went into crypto for the money, and then also like the decentralization aspect. But
Right.
in some cases, it was just as like, oh yeah, yeah, this decentralization is a sort of nice to have feature. And I
Yeah.
think for the people who came into crypto later, let's say, it's probably on a spectrum, right? Like I think almost no one after let's say 2017, if you came into crypto, stumbled on crypto from let's say 2018 onwards, like no one, I think, unless you're living in maybe let's say a sort of totalitarian regime in some
Yeah.
third world nation where it's just a dictatorship, and that's the only way that you sort of can freely transfer money, then sure. But those cases aside, I think pretty much everyone, at least to a degree, is in it for the money.
Agree.
But I also think that there's, like I said, a sort of spectrum of how much people care about the other stuff. And I think from what I've seen, yeah, it really depends, right? Like there's a lot of traders, for example. There was this one trader that I followed, who seems to be a really smart person, and I think it was only like maybe 1 or 2 months ago that he was saying like, yeah, I'm trying out DeFi for the first time. Um, and that was just so weird to me because I was thinking like, wait, you never even tried to have like an on-chain transaction, um, but apparently
Oh man.
not. I mean, for some people, I guess crypto is just another market where the
Right.
volatility is way higher than your average market besides crypto. But yeah, I think this proves that kind of the core principles are still what it's about, right? Like if the government
Yeah.
can just, or not even the government, if just any entity can take your money that easily,
Exactly.
then
Exactly.
then why are you even here?
No, agreed. Like, dude, I remember watching the GameStop fiasco with like Robin Hood and them just
Yeah, yeah,
halting. You see what I'm saying? Like, it's like people seen it, like seeing the invisible hand, like very clearly then. So like
yep,
I could, like hopefully there was like a portion of people that was like playing around with money on Robinhood and realizing, oh wow, there needs to be something that's more decentralized, and then they figured out crypto, and then they really seen how like on chain trading and just on chain in general is like a lot better because like you could see the decentralization and not worrying about like something like this happening, and it's like more people need to start realizing this, and like I can see it happening at exponential scale, like more and more as we grow, and like some of these fundamental development like come into place. Like I mean, just seeing like something like the bridge hack, I could see you know like anybody coming into crypto right now would be scared because like they're like, oh yeah, I don't want to like move in between chains. Like they would just
yeah,
stick to one chain, for example, right? So there's still a lot of things to come into place, but like it's not like it's never gonna come into place. Once it's already in development. So once it does, like it's gonna make things a lot easier, and it's people are gonna prefer using everything on chain rather than just like some of these centralized entities.
Yeah, and I think it touches on two aspects. Like, first of all, the importance of layer twos, because as far as I know, the security between, let's say, layer two and layer one is
Mm,
better than, let's say, cross chain in that sense of like Ethereum to, let's say, Avalanche.
agreed.
And I also hope it furthers something like this Celsius hack, or not. This wasn't a hack, right? This was just court filings that
Yeah,
reveal
yeah,
everyone's details. Um, but I also hope that increases things like Aztec, right? Like privacy by default.
right. No, agreed. I mean, we've covered this multiple times. Just even the idea of like even on chain having some privacy aspects where people don't really see like even what you're trading, what you're holding in your wallet, all these different things because they're
Yeah,
important. It's like, yeah, it's fun to just find like let's just say Twitter accounts and then find their address, their Ethereum address based on their NFTs or whatever. That's cool and all, and like, but like it gets to another level once we like start seeing various other applications on chain. Like it's not just like financial applications. There's also maybe like some healthcare, maybe some other things where privacy really needs to be in place, right? So it's, I mean, it will get in there 100%, and
yeah. I
it's
mean, I
fun.
hope so.
It's Yeah, no, agreed. And it's funny because like something like MakerDao pretty much investing 500 million into U.S. Treasuries and corporate bonds. Like I like this point right here, where they're pretty much saying like this is a kind of a way for MakerDAO to kind of bribe, you know, like for them to like not really look into like die or probably like just leave die alone. And like I mean, you could. This is just speculation, but it's pretty much fun. It's pretty funny to think about. It's just like they
Yeah,
need to go this route just to like make sure they're okay. You know.
I mean, that is an interesting thought, and I don't know if it is correct in the sense that
Yeah.
I think you can almost ask the question of like, what is, in a case like this, what would be the minimum amount for the bribe, essentially, right? Like, if you see this as a bribe, then
Mm.
obviously MakerDAO just buying, let's say, $500,000 worth of U.S. Treasury bonds wouldn't be enough, I imagine. Um,
Yeah.
or
Um,
like to even give a more ridiculous example, obviously it wouldn't work with $5. So
yeah.
that is a super obvious example, but I'm wondering if like half a billion would be enough, or
Mm.
if the if the U.S. government would still um, go after MakerDAO. But I
Yeah.
mean, I guess time can only tell.
Yeah. Agreed.
And I'm
Agreed.
hoping they also combine it with other lobbying efforts, because I'm guessing just
Yes.
only buying the bonds isn't exactly enough.
Yeah. Yeah. No. It may be enough just to like just just to keep them away from die for a set period of time, so they can continue growing. So then they can continue this bribe in a way, like
Yeah,
continue
yeah.
growing the amount that they're pretty much bribing. But like someone made a point, pretty much saying like, oh yeah, you buy treasury bonds. I mean, yeah, essentially you buy treasury bonds, and then the risk is the U.S. dollar collapsing versus like you
Yep.
yield farming, and then the protocol collapsing or a hacker and exploit going on. So it's like there's still risk. It's just like it's just like what, like if MakerDAO was to like take that 500 million and just throw it onto Aave, in a way you're pretty much like you're trying to like bribe Aave in a way to like work with MakerDAO and more closely, maybe like build something out in the future. So you can think about it in that way too. but like it's still the risk of like Aave having any problems too, right? But like in a
Yeah,
scenario with treasury bonds and everything, like the risk is there, but it's not as high of like
yeah,
protocol failing and everything.
yeah, exactly. And yeah, I think maybe we've already talked about this previously. I don't remember, but like I don't really see the US dollar imploding anytime soon in the,
Mm.
I mean, not in the short term and medium
Yeah.
term at least. Like I still think, and if you would have asked me this a year ago or like 2 years ago, I would have given a completely different answer, to be honest.
Yeah. Yeah.
But
No,
yeah,
I completely understand.
yeah, I think the for me personally, I underestimated the power that a reserve currency has, and I do
Yep.
think, let's say the euro, just speaking from personal experience, could be hit way harder. And
Yeah.
um, yeah, you already see it, right? Like I remember, I think when it was around like 1.5 or so, it
Mm.
had already fallen. I mean, it has already fallen like a lot. But even in just the past year, the past 2 years, but even when it was like around 1.5, people were already saying like, yeah, no, it now is too late to let's say swap your euros for dollars. It's you're pretty much buying the bottom or selling the bottom, I should say. um, and now, I mean, I yeah, it keeps going down. Like it went up, I think, for about a few days or maybe like a week or so, um, to about $1 again, and now it's back to around 79 cents.
Yeah.
I think it just gets worse as we have a colder period, because I just saw, actually, maybe you can, I mean, you don't even have to pull it up. I can just say it because it's such a short, it was such a short tweet, but there was this tweet by, let's see, like Watcher Guru. I don't know if you
Mm.
know that account,
Yeah.
but yeah,
Yeah.
it says like France will spend 100 billion to protect citizens from inflation, and that
Yeah.
was, I'm pretty sure I already mentioned this on one of the previous episodes, but I think what will happen is they need to print money, right? Because
Yep.
what I think will happen is the war with Ukraine and Russia is not stopping anytime soon.
Yep.
So like gas and oil and things like that won't get any cheaper anytime soon. But people can't really take it anymore. I mean, it's
Yeah.
already
Sure.
super high. So the government will effectively put in place a sort of maximum that citizens will have to pay for gas and whatever. But if, let's
Mm.
say, I don't know, let's say right now the price for gas or something is like, I think it's per liter. So let's say it's $2, around $2, probably a bit more,
Mm.
but let's say $2. Um, if people can't take it anymore or the prices become even higher, then what will happen is the government will just say like, okay, at the gas station you're not paying more than $2. But if Russia
Yeah.
decides to say, let's sell the oil, or whoever is selling it, right? Yeah, the price is $5 per liter. Then the government will have to print that $3 difference, or €3 difference in this
Yeah.
case. So
That's true.
if they have to get that money from somewhere, then most likely they're going to print the money, right? That's just always how governments work.
Yeah.
So more more currency in circulation, I mean, that's super easy, equals less value for that currency. um,
Yeah.
yeah,
Agreed.
so what they will do, I guess, to kind of combat inflation is just give people direct stimulus packages with let's say a sort of gas coupons, right? Like let's say, yeah, this month you're getting, or each month you're getting, let's say, I don't know, 100 euros or 200 euros specifically, only for you to be able to buy gas,
Right.
and or it could be like you're getting sort of food coupons, and it probably will work in a sort of progressive system where
Yeah.
like the lowest earning people will get more of the benefits than the higher earning people.
Yeah.
But that way, you're sort of not directly injecting that much liquidity into the market. But at the end of the day, it's still inflation. So for the short term, it might work, but in the
Yeah.
long term, you're still inflating the currency. So
Yep.
yeah, I can't really see the euro going up that much, and with like those news things coming on of like France will say it's spending 100 billion to protect citizens from inflation. I mean, I know there's going to be a sort of maximum. I think they're calling it a ceiling here as well, for how much you have to pay for, let's say, your gas bill in your home.
Mm.
I'm pretty sure the UK is doing the same thing, even though they're not using the euro. But I mean, you're just seeing it. I mean, probably Germany as well, I would guess. Yeah, so I don't think the euro is going to go up anytime soon.
No, I agree, dude. I mean, like even just thinking about the U.S. like in the last 2 years printing 80% of the supply. I mean, it's crazy just to think about that. Like if we were to look at it in crypto terms, let's just say something like Ethereum printed 80% of the supply in a short period of time. Yeah, the price would just go straight down. Of course, it depends on how like where the coins are in circulation.
Yeah,
But yeah, either way, like you're diluting the value. So like it's gonna happen like where the dollar is gonna like collapse on itself. Maybe not right in the short term, maybe not in the medium term, but it's eventually gonna happen just because of the way that it's just been going. And it's not like they could just like the way that they've stopped printing. Like it's just trying to raise interest rate and everything like that. It's just still hurting other countries. So if they stop raising interest rates and continue inflating the dollar, it's just gonna go back to like them going towards hyperinflation, and then it just really collapses. Then so it's like they're just delaying the inevitable. So it's like
yeah,
yeah, man, it's
yeah.
pretty
It's
crazy.
yeah, it's they're stuck between a rock and a hard place, basically. Like
Yeah, yep,
either you drag down the whole world economy, if you're hiking,
yeah.
but if you're printing again, then there's gonna come a time when people have lost so much of the value of their savings as kind of beyond repair. But we'll see. We'll see.
Yeah, no, definitely, definitely. But yeah, let's start touching on like some of the good news at least, and like, it's something that's pretty interesting to see is like the ability to essentially restake the Ethereum that you already have staked. So like, hey, like imagine like you having, let's say, running your node with Rocket Pool. You're already incentivized to run the node, so you're earning from like regular ETH staking plus like the rewards that Rocket Pool distributes, and then now you can restake this staked ETH in another protocol to then earn more yield. That's pretty interesting.
Yeah, I mean, I'm still thinking through this one because um, kind of staking a derivative is usually where the Ponzi scheme starts,
Yeah.
like I think, yeah, after last year, and I mean even from 2020 onwards, we're all pretty familiar with that. But
I like how he posts this picture like with people like remember when people were just running to just essentially deposit the whatever crypto that they had just to earn this yam token just
yep,
to yield farm. Yeah, that was pretty funny. So like is it I feel like he has that he probably thinking about that same thing now too. It's like yeah, the Ponzi's could really start popping up in this instance where like it's easy for people to be like, oh yeah, we'll print tokens out of thin air and then reward you if you stake your ETH token onto onto our platform, like yeah, then like we can start seeing some problems there. It'd be pretty funny.
Yeah, so I don't know. Like I'm obviously for her yield, but
Yeah,
to me this doesn't really seem like the very safest,
yeah,
or not even. It's not even that much about safety, but more so, I guess, about sustainability, right? Like
yep,
I think
yeah,
safety is one thing, and it can be unsafe if you run into a situation similar to Bancor, right? Like what happened with Bancor, I guess, was
yeah,
basically
exactly.
like I guess that you could break down the choice to like either they would completely fuck up the token and
Yeah,
basically inflate the token to zero,
yeah,
possibly, or just keeping everyone's funds hostage. Um, and for some
exactly.
reason, I don't really think that happened a lot during DeFi summer, right? It was more just the impermanent loss would just
Yeah,
completely fuck you. So that was kind of your own problem. But the protocols themselves, at least from what I remember, there was not really protocols holding funds hostage as Banker did. So,
agree.
um, but
Yeah,
so yeah, I guess that's maybe a difference in safety. But I
yeah,
would be careful with like these things because, like I said, this like staking derivatives is usually or staking derivatives of staking derivatives is where it kind of goes
uh,
wrong. Um,
yeah.
yeah,
No, I agree. So I the reason like this is even hype right now because like the like you can't withdraw right now. Like it's not enabled yet. So it's like, oh yeah, let's find another way to like be able to use the liquidity of the yield that they receive. So like it's like okay, let me just stake the staking derivative into this platform, earn this yield, sell off this yield, and then I don't really have to worry about the yield that I'm getting, for staking Ethereum to begin with. And it's not like they could really use it until like withdrawals are enabled. Maybe after they enable it, it dies down when hype. But like who knows? Like it really can be some problems where someone just like says, yeah, like someone creates another VM for just specifically like staking derivative, like ETH staking derivatives. Like it'd be pretty
yeah. I
funny to
mean,
see.
I wouldn't be surprised, and I think if we do get that, we're probably gonna repeat the whole game over again when
Yeah.
Chainlink staking comes out.
Oh yeah, 100%. Oh man, I agree. But yeah, let's end that off on a really really good note. Honestly, like even seeing like every tornado crash and then them central front end, and it's like Dappnet is like so necessary. Where the front end are essentially centralized, and you don't have to like worry about like I mean it being like punctured in a way. So it's like okay, we're moving in the right, like something that can just be go mainstream, and it's like every C app has their front end running like just like this, and then like, people can just access it or some variations of the app net.
Yeah, I mean, completely agree. Everything that makes DeFi more like censorship resistant is good in my opinion, and also it needs to be easy enough, right? Like crypto as it
Exactly.
is already not the most user friendly. You could definitely argue like let's say I don't know, let's say maybe the boomer generation just learned how to, or maybe that's a bit of an over exaggeration, but let's over exaggerate a little bit. They just learned how to check their email, and like
Yeah.
crypto now is way more difficult than that. Even if we might think like, yeah, no, it's easy enough if you put in like I don't know, let's say a week worth of learning the basics or something. That's still
Yeah.
too difficult for most people, if we're being honest. So kind of the argument of like, yeah, even though the front end is censored or taken down or whatever, you can still access it, just via the smart contract. I mean,
Yeah.
Yeah, technically that's right, that's correct. But let's be honest, like 99% of people, or maybe even less, I would probably think less, to be honest,
Yeah.
cannot do that. There's no way most people can do that. So the
No, agree.
easier it gets, the better.
Like this is like deep and just a whole new thing. Like, no, it's pretty much right there. You use it fast and like, it makes sense. And like just make it short and like easy. Like, oh yeah, go yap now. We all pages that you just use it. You know, work about, you know, like, you know, like how you were saying it works. You know, it's, you know, it's harmful.
Yeah,
Really, really,
yeah. I hope we can. Yeah, I hope in a sort of let's say in a future scenario we have this and privacy by default. I mean, if we have that and like low transaction costs, I think at that point you're pretty much pretty golden.
oh, it's just like, you know, that feeding in the wild.
Oh yeah,
Like,
yeah,
or say, say a variant of Google Play Store, Apple, like Apple, like not just download the application and all that you faster yeah, honestly.
yeah. Me too.
Past week, you know, 16, like, like,
We just keep
um,
pushing along.